Hello, everybody. How is everyone? We have few minutes just to test the technology. Can somebody confirm that you can hear me?
We can hear you.
Thank you so much. Lovely. Okay, we'll start at 1 o'clock. At the same time, I'm going to set up the student list. Can somebody please do me a favor? Can you please share your screen so that I know you can share your screen? Somebody want to test?
I'm trying to share. Can you see it?
Oh, thank you so much. Let me see. Give me one moment. I'm in the middle of something. Okay, let me see. Wow, wonderful. It is Luke or Eric. It's Eric, right?
Yeah.
Okay, great. So I can see it. Wonderful.
Perfect.
So
I'll stop sharing for the moment then.
Okay, great. So I'm going to pull out student list. I'll try to. Can somebody confirm that you can see my screen?
Yes, we can, Professor.
Oh, thank you so much. We have few minutes to go. So just try to open up the group members. Josh Karat here. Josh Karat. Saraf here? I know we have few minutes,
Yes,
but
Professor.
sorry, Saraf?
Yes, I'm here.
Okay, so your group have 3 members, right?
Yes.
Okay, so I'm going to identify your number here against the class list. So this is the one, and then Saraf W. Can you help me identify your name on this list? Number
Sure.
14.
So it's number 4.
14. Number 13, right?
Number 14, correct.
Okay,
And
thank you.
other members are number 4 and number 23.
Oh, thank you so much. Number 4.
problem.
Number 23. Fantastic. Okay. Do I have May? Are you here, or Lake Shen? Pavlik?
Yes. Yes, I'm here.
Can you help me identify your group member based on the class list here?
Yeah. It's number 7, number 9, and number 21.
Number 9, number 21. Thank you so much. This group, and then I have Eric. Eric, can you help me identify your group member?
We are 6, 19, and 22.
Thank you so much. And the next, Li Brown, Wu Han, are you here?
Yes.
Thank you so much.
10, 25, 26.
Thank you so much. And then Joy, are you here? Abdul, James?
Yeah, we're number 3, number 5, and number 16.
Thank you so much. Next, Saad, Simran, are you here? Eldrick, Mohez, one of the students here. Okay, I'll try to draw down Kang. Kang. Pablo, Simran. Anyone in this group, can you help me? Okay, Donut, 6, and then Ementas, 6. If you are here, and if you don't see our targeted group number, I assign each group a number. If you don't see your name belong to a group, can you speak up? So Hussein, are you here? Alishan, are you here?
Yes, Professor, I'm here.
Alishan, which group are you in, Alishan?
So we're number 12, number 15, and number 17.
Give me 1 second. So I'm going to assign you number 7, number 12.
15 and 17.
15 and 17. Thank you so much. And now I have one student, Hashi. Oh, this student is dropped. So I should delete this one. Oh, no, not this one. Sorry. Hashim, are you here? Hashim, I remember one student dropped. Connor, are you here? Connor Wilson, are you here? Okay. Hossein Aliyan, are you here? Hossein. Okay. So everyone, if you are here, can you make sure you have a group number beside your name? If not, please speak up. Okay, so I assume everybody present say you belong to a group, and remember your group number. Okay, this is the group number I assigned. So welcome to our presentation, everyone. By the way, this presentation will be recorded. Any objections? Any objections to record this presentation? Okay, no objections. So.
Hi, Professor. I just had a question.
Oh, sure.
Do we need our cameras on for this? Or...
When you do the presentation, you need your cameras on, yes?
Okay, thank you.
If you like, you can, when other group present, you can also have your camera on. But when your group is presenting, I hope you have your camera on, please, okay? Okay, so I'm going to announce the order of the presentation, and then I will go through the logistics of the presentation. After that, we'll start the presentation. So each student, you have a group number here. Okay, this is your group number I assigned. Maximum 15 minutes. If you have 10 minutes, that's fine. 10 minutes to 15 minutes, that's all great. Those timing include setup, closing, transition from group to group. Okay. The evaluation system is based on, for project presentation, it is 5 points, total out of 5, okay? And you are also required to submit a summary of other groups' presentation. Summary of other group presentation. It is 70 word to 100 word. Under assignments, you need to submit a summary for other groups. Okay. If you click this one, the description asks you for 70 to 100 words. And this summary will include group members, their name, their project title, and brief summary. Altogether 75 to 100 words. And make sure this is an individual submission, not collaboration with your members. Okay, you do your own summary for other groups. That's each student should have a unique submission. Please do not copy and paste from another students. Okay, so this is a 1% toward your final mark, actually your group project. Okay, remember total group project, we have 20, this is 1%. Oral presentation, 5%. Project report is 14%.
Professor, I had a question.
Oh, sure.
Do we have the summaries for all the groups that are presenting or just any one of the groups?
You have to summarize all the groups except your groups.
Okay, perfect. Thank you.
Do the submission for all the groups. Thank you for your question. Okay. This is this announcement about presentation. So this is the mark breakdown for your 20%. Presentation is 5%. Summary of other groups is 1%. Project report is 14%. Okay. Any questions? You are expected to stay in the class throughout the presentations. Okay. Okay. Any questions? Let me see.
Yes, Professor.
Yes.
So the summary for other groups, do we have to, so 75 to 100 words for each group?
70 to 100, the summary is for each group. So if we have 6 groups, you should have 6 paragraph, one paragraph for each group. Each paragraph is 70 to 100 words. So you do summary for each and every group except your group.
Okay. Thank you.
Okay, do the summary for all the groups. Each group summary is 70 to 100 words. I should make that clear. Sorry for that. I cannot see the chart. Let me see. Any other questions? How many groups we have in total? Total, we have 7 groups. Okay. So I'm just last call to see Connor Wilson. Are you here, Connor? Hashim, are you here? Hashim Sowa, no? And Hossein, Alaya. Oh, this person might be dropped. This one. One of them is dropping the class. Okay. So group 1 ready? So you know who is group 1? Aisha,
Professor.
Saraf, just current. Okay, so I'm going to stop sharing my computer so that you can share your computer. Give me 1 second. I will stop sharing my. So I stopped sharing mine. Please share your screen. And when you're presenting all group members, please turn on your camera.
Professor, hi.
Yes.
I just had to let you know one thing before we begin. So both my team members will have their cameras on except for me because I am very sick at the moment. So I'm just avoiding that for now. I'm just going to go ahead and do the presentation without the camera off. And I really do apologize, but I hope you're considerate enough to take that a note. Thank you.
Okay, that's fine. Thank you so much.
No problem. Thank you.
Awesome. Before we begin, I just wanted to know if everyone can see my screen.
Yes.
Okay, awesome. Thank you, Professor. So we'll just get started. Good afternoon, everyone. I hope everyone's having a great day. So the topic we chose for our presentation is the comparison of unemployment and crime rates during COVID-19 in Canada. And we're going to be talking about it. My name is Ayushi. My fellow group member is Jeshkirit and Sarah Wamia, who I will be passing on to words later. But before we begin, just wanted to give you a brief overview into what we're talking about in this presentation. And our main focus was to analyze the interdependency of unemployment and crime rates, or the number of crimes that have occurred during the COVID-19 pandemic. And the reason that we chose this topic was because we saw multiple cases of young people and the youth losing their jobs, like I'm sure you all are aware of. And this, as we all know, that the youth is also more influenced, and thus crime rate could seem like an interesting parameter to analyze. So our aim was to again analyze the interdependency, if any, of the number of crimes and unemployment during the COVID-19 pandemic. We've conducted multiple tests, including the bivariate analysis, paired sample t-test, as well as regression analysis. Our sources were derived from Stats Canada, which is a government website, just to ensure that our data is most accurate and up to date. And it is provided with over a period of 1 year, which is what we found that the website was updated with. The following tests that we will be talking about are conducted on a 0.05 level of significance, and the critical z-score values when using a 95% confidence interval or a 0.5 significance level are minus 1.96 and plus 1.96 for the standard deviations. We also conducted a 5-step hypothesis test, and our null hypothesis is as follows. There is a significant difference relationship between the number of crimes and unemployment during COVID-19, and our alternative hypothesis is that there is no significant difference or relationship between the number of crimes and unemployment during COVID-19. So like I mentioned before, that we conducted multiple tests, our bivariate, our t-test, as well as a regression analysis. Currently, you will be able to see a scatter plot on your screens, and now I will be passing it on to Sarah to talk more about what it entails.
Thank you so much, Ayushi. Good afternoon, everybody, and I hope you guys are doing well today. I'm going to go ahead and explain the different tests that we conducted to prove our hypothesis or not. So as you can see on your screen right now, the first thing that we have is a scatter plot. And the reason why we did a scatter plot to begin with is because it gives us a visualization of what we're actually looking into. And you can actually see the results a little bit more clearer in the scatter plot itself. It can be seen that there is actually no significant relationship between the number of crimes and unemployment during COVID-19, but we're going to further prove that through the different tests that we ran during our project. So if we are moving on to the next slide, we will be able to see that we first conducted a bivariate analysis. Now, in the analysis, you will be able to see the mean for both crime rate and unemployment, standard deviations, things like that. But the most important two factors that we're going to focus on is the significance value from the result and the Pearson correlation. Now, from here, we see that we've received a Pearson correlation of a negative 0.91. Now, what a negative Pearson correlation means is that the two variables, they're basically negatively interdependent, which means if one of the variable increases, the other decreases. And in this case, the Pearson correlation wouldn't matter because of our significance level. The significance level is 0.768 from the results, which is far greater than the significance level that we had conducted the tests on, which is 0.05%. Which means there is no correlation that is significant between the rates of crime or the numbers of crime during COVID-19 and unemployment, which gives us no sufficient evidence to prove so. So in this case, we can say that we can go ahead and reject the null hypothesis. To prove it a little bit more, we went ahead and conducted another test. It is the regression, bivariate regression, as you can see from the screen, that the results are summarized on the slide. In this case as well, you will see different values, the R square, the T values, the F values, there's mean square, there's significance. But two of the main things, once again, not two actually, three of the main values that we're going to focus on during the regression analysis is number one, our R square. The R square, as you can see, is a value of 0.008 or 0.8%, which basically interprets that a 0.8% change in crime rate can be accounted by unemployment during COVID-19. But is it significant enough? In this case, no. As because once again, we can see that the p-value is 0.768, which is far greater than our set significant value of 0.05, which automatically rejects the null hypothesis. And on top of that, we will find from our analysis is that the t-value is at a negative 0.302, which is less than our considered z-score of 1.96, which further proves that there is no significant effect of unemployment on crime rate. So once again, the null hypothesis is easily rejected. Next, I'm going to hand it over to Jessica to explain paired sample tests, and I would like to thank everybody for listening today.
So we did a paired sample test to compare the unemployment rate as well as the number of crimes that happened. So when we conducted that test, we found out that our t-score is 44.465 and the significance level is 0.768. So if we go back to our null hypothesis, which clearly states that there is a significant difference between relationship between number of the crimes and the unemployment during COVID-19, there are not enough evidence to signify that there is a correlation between these two. Thus, we have to reject our null hypothesis, proving our alternative hypothesis, which is basically there is no significant difference between relationship between number of crimes and unemployment during COVID-19. Moving on, I would like to just tell everyone the conclusion of our whole summary, that we did multiple tests and we couldn't find an interdependency between unemployment and crime rate during COVID-19. And we would recommend everyone to continuously monitor this to get a better understanding. And I believe there was a small fallacy during our report that there was only data available for just 1 year, because Government of Canada just started tracking all of this data since 2021, and there was no data available for 2020 for the COVID-19 cases as well as all of this. So due to lack of data, I think our report turned out to be something different than we've set out it to be. But I believe if we were to redo this test in the near future, the outcomes might differ because of the data that we would have would be greatly different than we have right now. And I would like to thank everyone for seeing our presentation and allowing us to explain it to everybody. If anyone has questions, feel free to ask us.
Okay, thank you all, Group 1, for your presentation. Are there any questions from audience? Any questions from students? Remember, one criteria for oral presentation is that well-managed question and answer. Okay. So if there is no question from audience, maybe we can move on to next group. The timing is great. You have 10 minutes. Excellent. Okay. So next group is group 2. Group 2. So if I can briefly share my computer, give me 1 second. In case some students miss your group number, give me 1 second. I'm sharing my computer. So group 2, this is group number, okay? Group 2, 1 here, Jera, and also here. Those are group 2, okay? So other group members, take a moment to locate your group number. Okay. Give me 1 moment. I have 1 student. Connor, thank you. I know you are here. Are you going to present individually, Connor? Connor, are you here? Okay, we are going to go back to Connor later. Okay, so I'm going, okay, let me see the message. Mic does not work. I'm sorry, your mic does not work, but are you? Okay, I will dealing with other issues later on. Okay, I'm going to unshare my screen so that group 2, you can share your screen.
Hi, Professor. Are you able to see our slides now?
Yes, very well.
So good afternoon, everyone. I am Lakshay, along with my outstanding group mates over here, Pavneet and Maeve, and we are here to present on our topic, housing prices in Canada. As we all know, the real estate has seen some exponential growth both during and post-pandemic. Therefore, we take a step forward to dig down as to what factors are really affecting the housing prices. Our goal is fairly simple, estimating and analyzing the determinants that have an impact on the prices of housing in Canada. Further, we also discussed whether the housing market affects the goods and services market. Moving on towards the literature review that we did, we found out that there were 4 main factors driving the housing prices in Canada, and those were mainly co-demands, known co-demands, government policies, and the supply in the market. To briefly discuss about these, co-demands consist of population growth, meaning the number of people entering a certain age bracket that have an affection towards buying a house, savings an individual or family has done to buy a house, and then all the external factors like mortgages, interest rates, financing, and the other key factors driving such prices. Moving towards the government policies, government has an direct impact towards these prices. In order to bring down the prices, government is taking active steps and imposing taxes wherever necessary. For example, in Ontario recently, the government imposed a tax in Toronto that for every property that is left vacant. The motive behind this is to motivate people to either put their properties either on rent or sell the property itself. Moving on, we have the supply, and supply is basically coming through two main reasons: the existing properties and the ones that are newly built, building in the making. Now I would like to pass on to Pavneet, who's going to walk through how and what kind of data is being collected. And it's on to you, Pavneet, now.
Thank you, Lakshay. Now I'm going to talk about our data collection process. So our main source of information that we utilize is from Statistics Canada, and it has a very wide variety of well-researched, accurate data on housing prices. And they also had very relevant data on location, owners, and other factors we used in our project. We decided to use Statistics Canada for our project as we agreed that they produced data which is very objective and of high quality because it's a government organization. Statistics Canada undertakes the Canadian Housing Survey every 2 years, and which makes up-to-date information about housing in Canada. The Canadian Housing Survey provides information on how Canadians feel about their housing and how housing affects them. And information collected varies from characteristics of dwelling, economic properties, neighborhood satisfaction, community engagement, and various dimensions of physical and mental well-being. Now, out of the many factors Lakshay talked about that affect the housing prices, we identified some key factors that we wanted to analyze in SPSS. And those factors are the location, the type of house, whether the house is rented or owned, the average household income, the average shelter cost, and the average shelter cost to income ratio. The average household income refers to the total annual income before the taxes, and income sources include, but not limited to, employment income, investment income, and transfer payments from the government. The average shelter cost refers to the total monthly shelter cost paid by the household for their dwelling. Shelter costs can be for renters, rent, and any payment for electricity, fuel, water, and other municipal services. Now, average shelter cost to income ratio refers to properties of proportion of total before tax income spent on shelter. The shelter cost to income ratio is calculated for each household individually by dividing the total annual shelter cost by its total annual income. And the majority of the data comes from Statistics Canada collection of census data from between 1991 until 2017. Now I'll pass it on to Maeve.
Thank you very much, Pavneet. So firstly, we chose the independent sample t-test because we wanted to compare the average cost of houses between two independent groups, owners and renters. The null hypothesis for this test states that there is no difference between the house costs of renters and owners, and the alternative hypothesis states that there is a difference between house prices of owners and renters. The p-value of the test equals 0.000. This is statistically significant, so we can reject the null hypothesis and accept the alternative, that there is a significant difference between the two groups. More specifically, from the mean values, we can see that the houses that are owned are more expensive, an average of $784 a month, while the houses that are rented average at $640 a month. Shelter costs for renters include rent and any payments for electricity, fuel and water, whereas for owners it includes mortgage repayments, property taxes and any other fees, along with payments for electricity, fuel and water. Next, we decided to do a one-way ANOVA because we want to investigate the difference in the mean of house costs between more than two independent groups, the types of houses: detached, semi-detached and terraced. The null hypothesis for this test states that there is no difference between detached, semi-detached and terraced houses regarding the cost of houses. The alternative hypothesis for this test states that there is a difference between the types of houses regarding house cost. The p-value of the test equals 0.156. So at a 5% level, we cannot accept the null hypothesis, and therefore we must reject the alternative hypothesis and accept that there is no significant difference between the three groups. Next, we did a multiple regression analysis. At first glance, the first model we calculated in our multiple regression suggests that the house, location, income, and STIR have a positive effect on the house costs. However, before we try to interpret the results of the model, we first checked its validity. For the house cost, the adjusted R-square calculated was 0.96, so 96 of the variation is explained, which would suggest that the model is very good. However, the test shows that the type of house and whether it is rented or owned is not a significant variable, as their p-value were equal to 0.421 and 0.643, which are both greater than 0.05. We adjusted the model so that its variables all have significant p-values. The housing cost model can be shown shown on screen. The R-squared value is equal to 0.96, so clearly the other variables were having very little effect in the model. The coefficients indicate that these two components are positively correlated with real estate costs. This new model will be more reliable and can now be used as a tool for predicting house costs. Finally, we decided to do a chi-square test. We chose this test because we want to investigate the difference between two nominal variables. The test variable is the type of houses, which is measured on a nominal scale. We are investigating the difference between two groups, owners and renters. The null hypothesis for this test states that there is no difference between the types of houses for owners and renters. The alternative hypothesis states that there is a difference between the types of houses for owners and renters. The p-value of the test equals 0.4. So in this case, we therefore conclude that there is no significant difference between the types of houses for owners and renters. I will now pass it back to Pavneet, who will give the limitations and conclusions.
Okay, so while researching, we found out that there were some limitations to the data as well. Like we did not make predictions on influencing factors, and this model can only calculate house prices when knowing all independent variables. For further improvement, a prediction model of independent variables would be required. And the data we collected is mostly taken from the census data, so it is mostly self-reported values. The provincial average housing cost and incomes are generated using self-reported house prices. And these values may be influenced by measurement errors, imputation, and the bias problems, which may force us to access the robustness of our estimates.
Thank you, Pavneet and Maeve, for your research. Now we can say that most of the factors that are affecting housing prices are location, average household income, and the average shelter-to-income ratio. Just to give an idea, if the income increases, housing demand will increase, causing the contradiction between the supply and demand again, therefore stimulating the housing prices. In conclusion, we can say that Canadian government should continue to develop the economy and reasonably guide the property demand. And last, thank you everyone for your patience and listening to our presentations. If you have any questions, please feel free to ask them. Thank you.
Okay, any questions from audience? Thank you for your presentation, group 2. Any questions? You can type in your questions or you can directly speak up.
So why did you choose to prioritize ANOVA over other statistical methods?
I suppose because for the ANOVA test, we wanted to investigate the difference in the mean of the house cost between more than two independent groups. So we wanted, because there was the types of houses include, for the data that we had, the types of houses that we included had detached, semi-detached and terraced. So because there was more than two independent groups, that's why we chose the one-way ANOVA to compare it against the mean of the house cost.
Okay, perfect, thank you.
Thank you, Sad, for your excellent question. Thank you, May, for your wonderful explanation. That's great. Any other questions? All right, so now let's move on, group 3. By the way, the submission or summary for the group, summary for other group, the due date is midnight today, not the end of class. The due date for the summary, due midnight of today, okay? You can rewatch this presentation if you didn't catch the main point of the presentation, okay? Thank you, Mahez, for your comment. That's great. Okay, next, group 3. I have a look. Eric, Andrew.
Please let me know if you can see that.
Yes, we can see it.
All right, perfect. I'm just going to leave it up for a moment so that way everybody can write down the title and our names, if that's okay.
Oh, that's wonderful. Thank you for so considerate. Yeah, leave a few moments until everybody can write down your name, your title. That's wonderful.
Hi, can you hear me?
Yes.
Do you mind if I keep my camera off? I've been sick for the last few days and I've been constantly blowing my nose and coughing, so.
That's fine, thank you.
Please just let us know when you're ready for us to start and Luke will kick it off.
All right, I'm guessing we are good to go. So good afternoon. My name is Luke and I'm here with my team members, Eric and Andrew, to present a look into Canadian CPI, debt, and inflation. Next slide.
So our main goal or purpose is to take a look at skyrocketing inflation, mounting debt, and current job uncertainty that is affecting the average Canadian. Inflation has always been a heavy topic of debate, from current rising prices of gasoline and the always increasing real estate market. So to consider the growth of inflation, we compared it to consumer price index, and through our results, we plan to find the best way for the average Canadian consumer to best utilize their money and to take a proactive stance against inflation. Next slide, please.
Thank you, Andrew. So just to quickly talk about our data collection, we have collected data from 2000 to present wherever possible. You will also find later on we have a section that we only use the months of 2021 January to 2022 January to get a drill down onto the current situation. All data that we used was collected and compiled from Statistics Canada and Statista for Brock University through the Brock University Library. Any assumptions we made will be noted during our presentation and in our report. You will find that we perform multiple linear regressions in a bivariate analysis. All analyses are at the 95% confidence interval. So, our first test was a simple regression analysis involving the rate of change for the Canadian inflation and the consumer price index. We wanted to test if statistically significant relationship existed between those two variables, and as such, our null hypothesis throughout is that the rate of inflation is equal to the rate of inflation of the Canadian price index, and the null hypothesis is that the rate of inflation is not equal to the rate of change for the Canadian price index. We used the first month of each calendar year to represent the CPI for that year, and we found a statistically significant measure of 0.026, meaning that inflation and the rate of change for inflation and the rate of change for the CPI are not the same. So, because we discovered this, we have decided to drill down further with two more regressions. The first is a multiple regression, because as I said, we reject a null hypothesis at the 95% level. We believe that this information will assist the government and the general population, as it will help make the CPI more reflective of the average Canadian, and it will help the average Canadian make informed decisions and understand what categories are more likely to increase in the future. For our second regression, it is a multiple linear regression. We use pre-provided grouped baskets from the Statistics Canada dataset. The Atom group, which we noticed was the lowest one, is the CPI percent change excluding the highest volatile indicators. And as such, we decided to investigate that a bit further, which Andrew will now discuss.
So to further test our hypothesis, we compared 7 major CPI baskets using monthly data from 2021 Consumer Price Index. The 7 baskets, as you can see from the slide, are food, shelter, household operations, furnishings and equipment, clothing and footwear, transportation, recreation, education and reading, and finally alcoholic beverages, tobacco, and recreational cannabis. So using our regression model, we found not only transportation and shelter showed a statistical significance at the 95% confidence interval, and they also had the highest standardized coefficient beta. Food, clothing, and footwear and recreation, education, and reading were also significant as they would fall into the area of rejection. However, shelter and transportation have a lower level of significance, making them more significant. The 2 least significant factors were household operations, furnishing and equipment, and alcohol, beverages, tobacco, and recreational cannabis, as their significance level would fall outside of the area of rejection. So from these 7 major CPI baskets, consumers should keep in mind shelter and transportation primarily when looking to cut costs, and give a second thought when it comes to household household operations, furnishings and equipment, and alcohol, beverages, tobacco, and recreational cannabis. Next slide.
Thank you, Andrew. So, from our findings, we have identified 3 key issues and potential remedies. First, for the time being, we found that consumers, according to the CPI index inflation, should purchase certain items with an in-depth degree of thought. Items that they must carefully consider include their transportation, shelter, and food costs due to heavy price increases in these sectors, which may require changes in habits in order to keep them within the consumer's level of affordability. This may be things like eating out less, using generic brand food, or downsizing your vehicle if you're currently using an all-wheel drive SUV that you realistically do not require. Our next major finding was that the real price index and the published price index are no longer aligned. Due to rampant inflation of some goods and relatively steady prices of others, in addition to changes in consumer habits and travel over the last 2 years, there are now key areas that are significantly over and underrepresented in the current CPI model. In the long term, we believe the CPI should be weighted against Canadians across all provinces, territories, ages, family sizes, and income levels in order to make sure that the weight of the baskets that compose the CPI are more accurately representative of the Canadian lifestyle. Finally, we believe that the government should attempt to smooth out price increases for high importance areas. We believe that they can do this by placing temporary price ceilings on gasoline and staple foods to provide price relief by limiting how much companies can make profit-wise per unit of goods sold of these in order to avoid the rampant price gouging that many are accusing them of doing so. And to further help this, the government can provide rebates for consumers in lower income brackets to offset the cost of these goods, then lift those rebates once inflation has returned to a more standard level. I will now pass it off to Luke to do one further analysis.
Next, we'll look at how different variables impact the inflation rate. Canada's national debt, we use that and we are going to compare it to the inflation of the Canadian dollar using a bivariate analysis. The null hypothesis is that there's going to be no significant correlation between the variables. And then the alternate hypothesis is that there is a significant correlation between the variables. And for this, we have a p-value of 0.05. Next slide. So upon conducting the analysis, we found out that it had a significance value of 0.159, which is larger than our p-value of 0.05. So therefore, we failed to reject the null hypothesis. And in sum, there is no significant correlation between the changes in the inflation rate and national debt. Next slide. After conducting the bivariate analysis and having it fail, we looked further into it and learned that the variables can still be looked at to help explain aspects of each other. For example, as inflation increases, the value of the dollar decreases, which means the government will be able to earn more and pay off the debt easier. In addition, as the national debt increases, the government will likely want to print more money off to pay some of it off, which will cause the buying buying power of the dollar to decrease and inflation to increase. Both of these interactions may have been more apparent if the sample size was larger, because the biggest issue with the bivariate analysis that we had was the low sample size. We could only find reliable data on the national debt from 2009 to 2020, which means the results could be skewed by abnormalities. Next.
Thank you, Luke. I will now just cover some general recommendations and summarize the most important ones we found. We believe that Statistics Canada's responsibility to Parliament should be removed and that they should be an independent pillar like the Bank of Canada is, to avoid them being responsible to the government, which may cause them to be releasing data that is not fully reliable. We believe that the CPI does not line up with real Canadian experiences and that a total overhaul of the CPI measuring system based on income level, location, household members, and actual housing and rent prices, depending on location, should be factored in much more significantly in order to paint a more accurate picture. Finally, we found that Statistics Canada CPI data is not easily compiled by end users. We call on the government to do more to make the data transparent and accessible, as it is there. However, some of it required multiple downloads, as it would only show a month at a time, or it would only show in some subcategories. We believe that it should be easy to mix and match data takeout directly on the site and allow for automatic calculations, such as percent change year over year, in order to make the average Canadian able to do these kinds of calculations on their own. We will now open the floor to any questions. If you have any questions, you can just turn on your mic because I can't see the Teams chat right now.
Hi, can I ask a question?
Of course.
Was there a specific reason you chose to do just the month of January and not the last month or any other, or was it just arbitrary?
We selected to do the month of January because that was also the month that the inflation rates that we used were posted, so we believed them to be an accurate measure. Plus, we did it over a 20-year time span. If we were to do it on a shorter time span, we would probably average out either the quarter or the entire year to try to find if there's any seasonality. However, we didn't believe that to be the case.
All right, thank you.
Any further questions? Okay, here are our references. Thank you for your attention.
Professor, your mic is muted.
Am I still sharing?
Yeah. Sorry, I unmuted myself. I would think about maybe give you a few moments to write down the main point of the group presentation so that we can move to the next group. So we just give you a few moments, okay?
Oh, Mohit, it appears that your hand's up for me. Did you have a question for us, or?
That was by accident, but it was a very good presentation. I really liked how you guys broke down the inflation rates and kind of like some of the biases in the CPI index.
Oh, thank you.
You're welcome.
Okay, are we ready to move to the next group, group 4?
Okay, Professor, I'm going to share my screen.
Thank you.
Okay, could you see my screen, Professor? Sorry, I can't hear you.
Yes, we can see your screen. Sorry.
Okay. Okay, perfect. All right. Are we ready?
Yeah, you can go.
Okay. Hello, everyone. Hello, Professor. My name is Wu Han. We are Group 4, and my group is going to talk about coffee study today. So, I believe coffee is considered as a daily drink or beverage. During our lifetime right now, generally speaking, having coffee could help us to keep awake and release the stress from daily workload or study. From what I know, some people might still think that having coffee would be able to help them to release their stress, but some people still believe that coffee don't really help them a lot. So that's the topic we're going to discuss today, coffee study. So in terms of those opinions from people, my group is very interested in doing research, analyze, and summarize the data summarize data about how coffee could help us through those observations and variables. First of all, before we analyze and summarize the data and topics that my group find out, I list those following purpose and reasons of researching this topic. To begin with, people might be wondering, what's the distribution of people who are having coffee every day? For example, how many people consume 1 cup of coffee every day? How many people do not consume any daily coffee? The reason why we would like to set up this purpose is to test and analyze how effective drinking coffee is for them. Then the second objective of studying this topic is to find out does the number of coffee matters for helping with your concerns, especially study stress. The reason why we would like to study this purpose is to know that if the number of coffee could really help them solve these concerns of study stress or not. Moreover, the second purpose of studying this topic is to know that what are the reasons bring people addicted to drink coffee every day. From my own experience, some people would like to consume coffee every day is because having coffee could help them to stay awake in the early morning. So we could say that different people have their own preferences or reasons why they would like to having coffee every day. They would like to have coffee. In addition, the fourth purpose that my group would like to study is to analyze how do people think that having coffee in general, such as do people believe that having their coffee is related to the reason why they choose to have coffee? If they do, how many people believe in that way? Ultimately, the last purpose of doing this research is to know that if having coffee is very helpful to people who have coffee every day or compared to the people who don't have coffee. If the answer is yes, then what is the percentage of people who drink coffee every day? Therefore, my group is going to use SPSS software to test and verify those above purpose and reasons. Next, I'll pass to my partner LeBron to discuss data collection and data analysis.
Thank you, Amy. Wen. Hello, everyone. I'm going to introduce the dataset overview of our study. Our study contains 94 observations, and we split 2 groups. The group 1 is the people who drink coffee daily. Group 2 is people who don't drink coffee daily. As we can see this pie chart, there are 52 observations who drink coffee daily, which take 55 of overall. Conversely, group 2 take 45. Next page, please. Next. So next slide, we are going to introduce the whether people think coffee is helpful in general. These data include the perspective from both groups. From this diagram, we can see there's almost 40% who think coffee is helpful for their concern. People who think coffee doesn't help is taken almost 31%, and there's a 30% stay in neutral. Next. Since our data set was split by two groups, here we can see the perspective from both groups more closely. We can see people who drink coffee daily is more positive on coffee. On the other hand, people who don't drink coffee daily had a more negative on coffee. Next slide, please. In terms of the purpose of drinking coffee, there's three different types: reducing study stress, refreshing every morning, and living habits. From the diagram, we can see the majority reason of drinking coffee is to reducing study stress. Living habit and refreshing every morning are right behind reducing study stress. Next slide, please. Our study is going to study the relationship between the number of coffee and group one's perspectives on coffee. First, I'm going to show the distribution of the group's perspective on each purpose. We can see here those who drink coffee daily for study stress had a relatively higher positive than those who don't drink coffee daily. Next slide, please. Yeah, so we group up the perspective on coffee from the concern. Almost 58 of the group one think coffee is helpful, and only 30% people think coffee doesn't help for their concern. Next slide, please. We're going to study the number of coffee and the attitude of each on each concern. First, we're going to study the purpose of reducing study stress by drinking coffee. As we can see from the graph, the more coffee people consume, the more positive they think the coffee is helpful to their concern. For instance, people who drink 2 cups of coffee had a relatively higher positive on coffee than those who only drink 1 cup of coffee daily. When people consume more 3 coffees daily, the data shows 100% coffee does help for their concern. Next slide, please. Similarly, when we study the number of coffee and other concern perspective on coffee, we discovered that the more coffee they consume, the higher positive they think the coffee is. Next slide had a similar result. Next, James is going to introduce 5 steps analysis test. Thank you.
Yeah, so thanks to LeBron. I'm James Zhang, and then we'll talk about the 5-step hypothesis test. We want to know whether drinking more coffee is more effective, so we use the independent sample t-test. That helps to compare the means of the two groups to verify that there is a statistically significant difference in the population means. There are 5 steps in the hypothesis test. We should find H0 and H1. We assume H0 is the mean value of people who believe coffee works for them is equal to the mean value of people who believe coffee does not work for them. H1 is that the mean value of people who believe coffee works for them is not equal to the mean value of people who believe coffee does not work for them. The data, we can see the table of group statistics and independent sample test. We can see that the p-value is 0.00, which is smaller than alpha. So we reject H0, which is statistically significant. Next slide. Then we'll discuss one-way ANOVA method. One-way analysis of variance is to try to compare 3 or more population means. Through the ANOVA test, we can know whether there are statistically significant difference between the mean values of more than 2 groups. Conduct a one-way ANOVA to investigate the relationship between how much coffee you drink daily and do you think coffee works for you. Next slide. In 11th test of equability of error variance based on the mean, we can see the p-value is 0.00. This p-value compares alpha is smaller than alpha, so equivariance assumes it is not equivariance. Next slide. So let us see the test of between subjects effects, also called ANOVA table. See the partial eta, and the partial eta is 0.310. We have a large effect size. We assume H0 is the mean value of people who believe coffee works for them equals the mean value of people who believe coffee does not work for them. H1 is that the mean value of people who believe coffee works for them is not equal to the mean value of people who believe coffee does not work for them. We can see that p-value of 0.00 is smaller than alpha, so we reject H0, which is statistically significant. Next page. In multiple comparisons, we can see that people who think coffee works for them and people who think coffee does not work for them have significant difference. We can see the p-value is smaller than alpha. People who think coffee works for them and people who think coffee maybe work for them also have significant difference. P-value is also smaller than alpha. People who think coffee does not work for them and people who think coffee maybe work for them are not significant. We can see p-value is 0.075. It's bigger than alpha. Yeah. And LeBron will talk about the conclusion.
To sum up, group 1 who drink coffee daily had a more positive result on drinking coffee for addressing their concern. There's a strong correlation between the number of coffee consumed and the effective rate of addressing concern by drinking coffee. Moreover, group 2, people who don't drink coffee daily, believe that coffee won't work for their concern. That's all for today. If you have any question, please feel free to ask. Thank you.
Jackie has a question. Do you do anything to control for bias since all the data is self-reported?
Yeah, thank you for Jacqueline. Yeah, we do think since the data set is small, so our conclusion may not inaccurate at all.
Okay.
Yeah, if we have more observation of the survey, we can draw more accurate conclusion for this topic. Thank you.
Okay, thank you for the question. Thank you for the answer. Any other questions? Okay, I have a question for this group. Initially, you have a topic about employment in Canada. What promotes you to change your topic from employment to coffee?
We find that data is very difficult to search, so we changed the topic. Yeah.
Okay, it is fine. Just wondering. Thank you so much. All right. Can I propose a 10-minute break? After 10 minutes, we have 3 groups left. Okay, so 10 minutes break, guys. Okay, back at 2:12. Okay. All right. Welcome back. Hope you have had a nice break. We have one question from group 4. If one of the group members don't mind, can you answer that question? The question was, do you think the consensus could be culturally representative of Canadians' taste in coffee?
Thank you, Mohis, for your question, but I do believe that it doesn't represent the Canadians' taste in coffee, because I believe it just depends on different people. Even like my group summary said, the more coffee people consume, the higher they think coffee is helpful to their concerns. But like some people could be like they just they like to have coffee every day, but some people don't, especially whenever you are Canadians or not. That's my answer. Thank you.
Thank you for the question, Mohan. Thank you, Wuhan, for your answer. That raises a question of cultural representations. I don't think their study include this. Maybe if you want to do the further study, you can divide your group into ethnic groups, people from Asian background, from African, from, Europe. Okay. That might help answer Mohei's question. Thank you again. Okay, any questions before we go to group 5? All right, group 5, Abdul, James, Joy. You ready?
Can everyone see the presentation?
Yes, we can see your presentation.
Okay, so I'll just give a few minutes for everyone to get prepared with the topic and everything.
Excellent.
Okay, so I'm hoping everyone's good to go. So with that being said, hello everyone. Hi Professor, this is Abdul, and I'm with my group members James and Joey, and our presentation is S&P 500 Index during the COVID pandemic. For our term project, we wanted to use our observation over the past 2 years in COVID-19 pandemic and our knowledge as business students to find a preemptive solution to a business problem relating to investment management. In this presentation, I'll begin by introducing the project itself and discussing the data composition processes. After that, Joy will speak about the data exploration steps that we took in this project. And finally, James will conclude with the discussion on the analysis and the findings. In the past 2 years, we've seen a major disruption in the North American commercial space, mostly due to the COVID-19 pandemic. The proposition of our project is to evaluate the implications of the pandemic on the North American commerce and potentially provide clarity on the future of the equity financing market. Ultimately, our goal is to assist retail investors in understanding how externalities and natural occurring events such as COVID-19 affect the short-term performance of the S&P 500 index. Before we dive into the project, for those unaware, S&P 500 index is a well-known market indicator which tracks the performance of the top 500 companies listed in the US stock exchanges. And its relevance is mostly drawn from its reputation as a great standard for retail and institutional investors. For the data set itself, we decided to focus on US COVID-19 data because S&P obviously is a US-based indicator, and it wouldn't be a good comparative for Canadian data. And we sourced the data sets for COVID-19 from the CDC and S&P 500 index from NASDAQ. Once we had the two data set, we used a little Python to create an inner join between the two data sets based on the date and created a master file. And we also omitted the weekend dates from the S&P 500 data as the markets closed on the weekend, so we did not have access. So we omitted the Saturday and Sunday data from our master data set. And at the end, we were left with 503 unique entries for us to conduct our analysis. And the data set was now ready for Joey to conduct the exploration steps.
Thank you, Abdul. So right after we got our data set ready to go, our first thing that we wanted to do was do the correlation between the number of COVID cases in the US and the stock price of the S&P 500. To do this, we wanted to do a Pearson correlation. What we found was that the results were statistically significant, with the p-value being less than 0.001 at a 0.005 significance level. As you can see, our Pearson correlation coefficient was 0.387, meaning that there is a positive correlation between the variables, even though it's not very strong. It's a weak positive correlation. The specific variables we decided to use were the adjusted close price of the S&P 500 stock and the 7-day moving average of new COVID cases in the US. And now I'll talk about our hypothesis. So our research hypothesis was if there's an increase in the number of COVID-19 cases in the US, the stock price of the S&P 500 index would decrease. And alternatively, if there's no sufficient evidence to see if there's a relationship between these two variables. To test this, we initially wanted to do an independent samples t-test. We ran into a few issues with our data because we didn't have a grouping variable, but to work around that, we decided to use a cutoff point with the mean of the average 7-day of COVID cases. So that cutoff point was 10,172 COVID cases. And we had to reject our null hypothesis because the mean below the cutoff point was actually smaller than above the cutoff point, which is contrary to what we initially thought was going to happen. As you can see, we have to reject the null hypothesis. It was a statistically significant test because the p-value was under 0.01 or 0.001 at a 0.005 significance level. And our t-value with 503 values was 8.897. And I'll pass it off to James to do the rest of our analysis.
Thanks, Joey. So in order to support our t-test and our findings with respect to our null hypothesis, we wanted to do some supporting measures in order to kind of check the validity of our data and further examine the relationship between the two variables. So the first supporting measure that we actually walked through was a regression analysis, where the adjusted close price was our dependent variable and the 7-day rolling average of COVID cases was our independent variable. Now, as we can see on the scatter plot, this resulted in an R-square value of 0.15 or also 15%. And this had an overall model significance of 0.01 for the p-value, which means that overall our regression model is significant at predicting the relationship between these two variables. On top of this, we also confirmed our positive correlation value of 0.387. Once again, as Joey pointed out, this was a weak positive correlation. But our main takeaway from this regression analysis is what exactly this means. So this means that overall, 15% of the variation in the S&P 500 price is explained by the variation in COVID cases. Now, from a statistical standpoint, this is a relatively low explanation in terms of R-squared. But when you consider all of the factors that kind of move into the price performance of the market, we find this to be a relatively reasonable chunk going forward. So the second step we actually took to support our data findings was an ANOVA analysis. This was specifically used to kind of check the difference in variance between our two variables. Once again, this analysis proved to be significant, and it did one key factor of confirming our effect size, which was, once again, 15%. So I'll just go ahead and move to the next slide now. So really, the key takeaways, what did we learn from this? What does this analysis imply? So overall, as Joey said, there isn't really a correlation between the two. And our regression analysis actually suggests that when COVID-19 cases are high, the S&P 500 price is also high. Now, this seems a little counterintuitive when you think about the initial market crash that happened when COVID first became prevalent in the US. But as we can see between these two graphs here, the top one being the overall performance price and the bottom graph being overall COVID cases, anecdotally, that also proves kind of our hypothesis, as the peak COVID cases tend to kind of align with the COVID or the high prices of the S&P index. So although there are a large number of factors at play that determine the S&P 500 price, COVID only captures 15% of this price variation. So we'll move on to the next slide to make some concluding remarks and some advice to you as a retail investor. Now, our models prove significant overall at determining the relationship between the COVID-19 cases and the S&P 500 index. And in order to kind of show that the COVID cases weren't really significant on explaining the relationship between the price and COVID cases, an extended analysis that included the volume of stocks traded raised the R-squared value to 0.52, which indicates that other factors are more important in determining an investment entry strategy. So the key takeaways for you as a retail investor is, high levels of COVID-19 do not suggest poor price performance, and it shouldn't, when COVID is at its highest, it shouldn't deter you from buying a position in the S&P 500. It's rather the opposite, as suggested by our regression formula, which suggests that overall, short-term returns tend to be a little bit higher when COVID is actually at its peak. So some other findings that we can determine from our R-squared value is that your market entry point should be independent to the COVID-19 case prevalence. And the index overall has a wide variety of factors that play into it and can't necessarily be predicted by one or two factors. So thanks everyone for listening to our presentation. Please let us know if you have any questions. We'd be happy to kind of walk through and explain anything.
Any questions?
Hello.
Hey.
Hey, so I believe maybe it was Abdul Hanan who mentioned it, but you guys used a Python script to join the two data sets. So did you have like data files or did you convert it into a data file? Just wondering like the technicality, like how.
Yeah, I can take this. So originally we had the two CSV files that we got for COVID-19 from CDC and S&P from NASDAQ. I used pandas on the pandas module on Python, and we just created a simple script that would take those CSV files, read them in as data frames, and then merge them. If I go back, the final, I believe the command there, that's the SP5 is the S&P 500 data frame, and the COVID is like that, and we use the date as our joining variable, and we basically just merged those together with that function. So that was done through pandas, and then obviously exported it back into CSV format once that was completed.
Okay, thank you.
Yep.
There was a question from chat. Jackie asked, do you have any ideas to a possible explanation for why the results were what they were?
Yeah, I can take this question. That's a great question, by the way. So really the main determining factor that kind of explained when COVID cases are high, the stock price is also high, was mainly our correlation analysis. Because it was a positive correlation, although weak, it does suggest overall that when COVID cases are higher, the stock price is also higher. Now, in terms of other factors that might explain this, there's a wide variety from kind of business performance to geopolitical events that may influence the overall market price. So it's hard to kind of capture that figure, but in terms of our extended analysis that included the stock volume traded, that showed kind of a huge representation of the variation in stock price. So that's just one of the many factors that could potentially play into it, if that answers your question.
Okay, thank you for your question, Jackie. Thank you, James, for your answer. And I have a question. Your data is based on retail investors. If you apply the similar technology or similar methodology to institutional investors, would you think the result will be changed?
I can take this one. I don't believe the results can be changed. Just as James mentioned, the COVID-19 does affect the stock prices, but there's other factors that are larger at play that affect the stock prices. So even if we're focusing on institutional, I believe that the COVID-19 by itself would not influence the stock prices to match our original hypothesis. And the other factors that James mentioned would be a larger play at the stock prices that would affect the stock prices. Sorry.
Thank you, Joy. That's great. Any other questions? Okay, let's conclude this group presentation. I will give you a few moments to write down the main point to prepare a summary for this group. All right, shall we move to group 6? Edric, Saad, and Simran. Mohit, you have question? You raise your hand.
Oh, I'm also in the group.
Okay.
Yeah.
Hi, everyone. My name is Simran.
Or are we starting? I thought we were going to give everyone some time to write it down quickly.
Yeah, that's great. Give people some time to write down your topic, your names.
Yeah. And as it's not listed here, I'll just mention our topic is comparing streaming services, which is Netflix and Disney Plus, against COVID cases.
Okay, so Simran, you can start whenever you're ready, I think.
So, hi everyone. My name is Simran Pabla.
And my name is Mohis.
And I'm Saad Khan.
Hello, I'm Alec Bonata.
And today we're going to be doing presenting to you our research findings and some of the general technicalities that we found through our presentation today. And as Simran had mentioned, so we're going to be reviewing basically, what are the implications of streaming services during the pandemic? What conclusions can we draw? So this is our itinerary for today. We're going to be starting off with the introduction, where we're going to go over COVID-19, Netflix, Disney Plus, our three main data objects. Then we're going to be going into our purpose, trying to understand what is the purpose of this data, and therefore draw upon later conclusions. Then we're going to be going into our data conclusion and our data analysis using SPS data analysis and explanations of why we did different things. And then we're going to be interpreting this data, and overall we're going to be packaging everything together and coming up with a general sort of recommendation in the end. So I'm going to pass on to Simran for our introduction.
Hi everyone. I will be starting off with COVID-19. It is an infectious disease that has greatly impacted everyone, and even now, our group presentations had to be moved online since one of the students caught COVID. Symptoms vary from person to person, and prevention techniques have also been put in place. Some people may be asymptomatic, which means showing no symptoms, while others may have high fever, headache, a dry cough, or shortness of breath. Prevention techniques include taking the vaccine. This includes having both doses, which is both doses as well as the booster shot, and keeping a safe distance, wearing a mask, and washing your hands regularly. Now, moving on to Netflix. Netflix is an American subscription streaming service and a production company having its own Netflix original series. Members are able to watch their chosen TV shows and movies without any breaks, like, for example, the commercials, and all that is needed is an internet connection. There are 3 different plans Netflix offers its customers. $9.99 per month, which is streaming on 1 device, $15.99, which is 2 devices, and $19.99 for 4 devices. However, the content doesn't vary across the different options. It's the same no matter what plan is chosen. As for Disney Plus, similar to Netflix, it is an American subscription streaming service. While Netflix offers a wide variety of shows and movies, Disney Plus is more family-friendly. A majority of the content on Disney is Disney-exclusive shows and movies, and the other content stems from Pixar, Marvel, and Star Wars. Many of the viewers buying the subscription service do it for a sense of nostalgia, some of the shows including Phineas and Ferb or Wizards of Waverly Place. Disney Plus has an $8 per month fee or an $80 per year annual subscription, and for an additional charge of $30, one can have premier access. Now I will be passing it off to Moise.
Okay, thank you, Simran, for your wonderful breakdown of our introductory section. And we're going to right away, we're going to get into our agenda section. We're going to get into our purpose. So again, my name is Mohis, and I'm going to be the next speaker for the section. We're going to be reviewing now what is the purpose of the report. So the main idea of the purpose is we want to understand what are the relationships between our data objects, in this case, our online streaming service, and the pandemic cases. So, going back to Netflix and Disney Plus, these are the massive online streaming giants within the industry. And the convenient for us is that Netflix, like Disney Plus, is operating under an oligopoly, which means that if we just analyze these 2 companies research-wise, we can actually make predictions and reliably about the industry as a whole. We can actually make very reliable, meaningful predictions. So this is very statistically important for us as we're doing a research. And obviously we used SPS software, we used various means to draw upon even more accurate conclusions. So we can provide meaningfully information to managers and other clients relating to streaming services and what directions we can take in regards to, what is the future of online streaming. So now I'm going to be passing it on to Saad, who's going to be doing our data breakdown. Thank you.
Hi, everyone. Again, my name is Saad, and starting off with the data collection, you can see there are variables, COVID total, Disney Plus total, and Netflix total all follow a scale measure, with only month being a nominal variable to denote the time period during which the data was captured. The 0 to 24 scale represents a 2-year period, with 12 months appearing respectively from January 2020 to December 2021. Our data was obtained from Statista.com, as well as other sources for North American COVID cases and financial company reports for streaming service revenue. Please note that our totals for streaming services are presented in millions. Now, creating a scatter plot with the COVID total as predictor variable and the 2 streaming services as each outcome variable, you can see visually that the data follows a general linear trend, but in order to confirm this, we must run a simple linear regression in SPSS. From the resulting output, we can see that we can observe the residual statistics, and we can see that the values of standard residuals for both outcome variables are within the ranges of -3.29 and +3.29 for the minimum and maximum respectively, which does indicate that our dataset doesn't contain significant outliers and it is safe to continue with the analysis. We can now confirm normality of residuals by observing the PP plot for both dependent variables, where the plotted points can be seen generally lining up along the 45-degree line. We can also confirm the normality of the distribution of our dependent variables and notice that both variables are roughly normally distributed. The scatter plot of the standardized residuals versus the predicted values is also roughly elliptical, as it should be. And although this may not be immediately evident, please note that elliptical distribution does increase with sample size. Now, onto the actual interpretation of the resulting output. In the correlation matrices, we can see that the Pearson correlation coefficient is 0.949 and 0.942 respectively, both indicating strong positive correlations. The descriptive statistics also give insight into mean, standard deviation, and sample size for both dependent variables. The R-square value derived from the model summary table, also known as the coefficient of determination, indicates that 88.7% and 90.1% of the variation in the variables of Netflix and Disney Plus can be explained by the predictor variable total COVID. Although we did not explicitly perform an ANOVA test, it is still part of the general linear model and can provide insight. The significance value of less than 0.01 indicates that our model with the predictor variable COVID is more effective than simply predicting with the mean. The coefficient tables provide a lot of useful information. For example, the B column gives us our constant and predictor variable coefficient respectively, and for our regression equation, which can be seen below each table. Also note that the standardized coefficients value indicates the standard deviation increase in dependent variable for one standard deviation increase in our predictor. Also note that the values from the regression equation should be interpreted in millions due to formatting for our original dataset. The null and alternate hypothesis are as follows. The null hypothesis states that the coefficients in the model are equal to 0, indicating no relationship with the response variable, whereas the alternate hypothesis indicates that there is a relationship. Due to the previously obtained p-value being smaller than 0.05, we can safely reject null hypothesis and conclude that there is a relationship between the predictor and response variable. And now I'm just going to be handing it over to Eldrick, who will conclude the presentation.
Thank you, Saad. So, in conclusion, our research and SPSS analysis has turned up the trend that the higher the COVID cases were, the more subscribers Disney Plus and Netflix would get for their subscriptions. This is the case due to more people having to stay at home in need of an alternative method of entertainment. So, in turn, the higher subscriptions led to a higher increase in revenue for both Disney Plus and Netflix. The main limitation of our model is that there could be other factors that affect this growth, but we believe COVID to be the biggest factor, as there has been a very big revenue change as COVID started. But lately, we've noticed that COVID cases start to go down. Likewise, we've also noticed that the increase in revenue for both Netflix and Disney Plus have started to stagnate. To combat this decrease in revenue, as COVID cases decrease and people get more adjusted to it, we anticipate that Disney Plus and Netflix come up with some other marketing strategies or some other way of enhancing the service to maintain this growth of customers and to keep their new customers satisfied. And these are the references we use. These sources are where we obtained the data for our SPSS dataset and analysis. To be more specific, we obtained the reported COVID cases and the reported Netflix and Disney Plus revenue figures from these sources. Thank you for your time, and that was our presentation. If there are any questions, feel free to ask. Yes, Eric.
There are two questions in the chat area. One is from Jackie. The question was, is there a reason you choose to only look at Netflix and Disney? What about a service like Crave? Could you apply the same conclusions?
Yeah, so I can answer that one. Like Mohiz alluded to before, because these two companies operate in a oligopoly environment, and because they've got such a huge market share in the public sector, we can safely assume that the same conclusions would be applied for other popular streaming services, such as, like you mentioned, Crave, even though it doesn't hold as much market share as Netflix and Disney Plus.
Thank you. And Eric asked, what about hybrid streaming services, such as Amazon Prime, that have video in addition to other benefits? Do you think they will have the same growth and face the same challenges?
Yeah, as you mentioned that since Amazon has additional benefits, that was one of the reasons why we did not choose to analyze it, since those other factors could have influenced why people get Amazon Prime rather than just streaming in general.
Okay, thank you both for students who asked questions and for people who answered the questions. That is so far the greatest interaction between the presenters and the audience. The first group, we had pretty quiet audience. Okay, great job. Any other last minute question? Okay, thank you again. As usual, we will take a moment to let you jot down the keywords, okay? Then we move on to the next group. Also our last group, group 7. So take down some key points from this presentation. Okay, our last group, group 7, with Rhoda, Jackie, and Alison. We can see your screen. That's great.
Good morning. Sorry, good afternoon, everyone.
So we can just leave the first slide there for a moment so everyone can get the topic and our names down. Okay, I think we should be good to get started then. So, hello, my name is Jacqueline, and today my colleagues Alishan and Rhoda and I will be presenting our research and conclusions comparing employment insurance claims across Canadian provinces. And then Rhoda, if you could just change the slide.
Thank you so much. So up on the screen here, I have our general agenda for today's presentation. So first I'll be taking you through project context, the purpose and data collection, and then I'm going to pass it off to Rhoda, who will explain the first half of the data analyses we conducted. And then Alisham will wrap up the presentation by presenting the other data analyses methods and all of the relevant conclusions. And then if it's okay with you guys, we'll just ask that you hold all questions until the end of the presentation when we invite questions. And then we can move to the next slide. So in the project context portion of the presentation, I'm going to be taking you through the important context to our project. So essentially, we're going to be talking about employment insurance. So there's some base information that'll make it a little bit easier to understand the conclusions that we make at the end. And we can move to the next slide. So first off is, what is employment insurance? So EI is a program run by the government to provide temporary income support to unemployed workers while they look for employment or take time off to upgrade their skills. So this can be things like losing your job, but it could also be things like pregnancy when you're not in a situation where you can take mat leave, or to care for a sick family member. Just a little bit of context, that individuals can only receive these benefits if they've paid premiums, meaning they've paid into EI over the course of the last year. And while we're presenting our research, consider if you know anyone who's ever received EI, but also is there a possibility that our data could have been affected by COVID-19? And we can move to the next slide. So obviously there are quite a few provinces and territories in Canada, so we had to make some choices in terms of what was a realistic amount of data to analyze. So we ended up settling on looking at Ontario, Quebec, and BC, primarily because of population, as they're the three largest populations in Canada. Then there's the added benefit of the geographic differences, looking at a province that's very central to the country, as well as one on each of the coasts. And we can move to the next slide. So sorry, I lost my notes for a second there. So in this section, I'm hoping to answer the questions: what was the point of this research project, why you should care, and how you should personally use this information. So our research questions are as follows. We strive to compare the number of employment insurance claims across Canadian provinces. Specifically, we want to look at the population means of employment insurance claims across British Columbia, Ontario, and Quebec, but we also hope to determine if the specific provinces are good predictors of Canada's total EI claims. There's a couple different applications for real-world significance with this topic. The first one being, we identified that the data could possibly be used in regards to employment trends. So an EI claim typically indicates either cyclical unemployment or early stages of structural employment, depending on the situation. So EI claims could be used to evaluate employment trends across the different provinces. The second application is the federal distribution of funding, as EI obviously costs the government money, so more money would need to be allocated to the provinces with the highest proportion of EI claims. And then thirdly is the concentration of social equity initiatives. If we go back to our very first idea, if we assume that an EI claim indicates some type of unemployment, then we can also draw the conclusion that the provinces with the highest mean for EI claims would also need the highest proportion of social equity initiatives. And then in this section, I'm hoping to answer the questions of where did the data come from, whether these are reliable sources, and why we choose to take the data from these sources. So we actually only required two sources of information for this project. Those were Statistics Canada and the Government of Canada website. We used Statistics Canada to retrieve our raw data, and then we used the Government of Canada website for all the contextual information. And now just taking a moment to look at the validity of the data. We know that the Government of Canada website is a reliable source because it is the official website for the government. Only government employees can alter the website, and all information must be verified before posting, so we know that we can trust it. Then on the other hand, Statistics Canada is a reliable source because it's the National Statistical Office for Canada. Therefore, only verified employees are able to post data, and all of the research must adhere to very strict ethics policies. And now I'm going to pass it off to Rhoda, and she'll take you through the next portion of the presentation.
Thank you, Jacqueline. So the first test we conducted was an analysis of variance. And this was to assess whether the groups that we had chosen were reliable enough to actually carry out this test. And so we also set a few parameters for ourselves using these assumptions. The first one would be that the data is normally distributed, as well as them being random. And lastly, the variances of the dependent variable are all the same for the populations. And these are our set hypotheses. For the now, it would be all means are equal. And then for the alternative was at least one provincial mean is different from the rest. And based off of this test, we can tell from the descriptive table that the means are not the same. And to further affirm this, we can see from our test between subjects that the significance value is less than the set alpha of 0.05, and our model is significant. And to continue with this, we can see that our box plot shows that the medians are not at the same level, meaning that the means are not the same. So we can conclude that this model is significant, yes, reject the null hypothesis, and also say that yes, these set provinces are okay to use to determine the overall EI claims. Now I'll pass it on to Alishan to take us through a test that will show us how strong these values are to predict the overall EI claims. Thank you.
So hello everyone, thank you Rhoda. So now we shall move on to our next data analysis for our data. The other type of analysis that we have used to find the relationship between the two variables is the bivariate linear regression analysis. So this linear regression can be used to analyze data from experimental or non-experimental designs. If they're experimental, then the X and Y variables can be called the independent and dependent variables. And if they're non-experimental, then the X and Y variables can be referred to as the predictor or criterion. For our bivariate linear regression problem, the data we collected as the independent or predictor variable is the provincial EI claims, and the dependent or criterion variable is the total EI claims. So this regression analysis computes an equation that relates the predicted total EI claims to provincial EI claims. We have assigned value labels for each province. So as our label 1 is British Columbia, 2 is Ontario, and 3 is Quebec. Next slide. Yep, perfect. Our next slide has 3 assumptions for the bivariate linear regression analysis. The first assumption is that the dependent variable is normally distributed in each population for each level of the independent variable. And its decision is that with a moderate or large sample size, the test of the slope may give accurate p-values and may also give invalid p-values if the distribution is not normal and the sample size is small. Our second assumption is that the population variances of the dependent variable are the same for all levels of the independent variable. And its decision is that if the assumption is violated and the sample sizes differ instead of being the same, then the p-value in the f-test is not trustworthy. Our third assumption was that the case represents a random sample from the population and the scores are independent. So the decision for that is that if the significance test for the regression analysis will give out inaccurate p-values, then the assumption is violated. Next slide. So here we got the model summary and the coefficients output from SPSS. I will now explain the steps required to get these outputs on our data from SPSS. So firstly, we clicked on Analyze, then we clicked on Regression, and then clicked on Linear. Next, we inserted both our variables to the dependent and independent boxes, respectively. We then clicked on Statistics and checked the confidence intervals, descriptives, estimates, and model fit boxes. Then we clicked on Continue and OK. After that, the output pops up. So in the output shown on the slide, the R measures the strength of the relationship and the R squared shows the effectiveness of the model. So our R was 0.281 and our R squared was 0.079. So this tells us that there is a weak positive relationship between the provincial EI claims and the total EI claims, and the model is only 7.9% effective. So this shows that the model is not very strong. In the coefficients table, shows the b-value for the slope and the constant. So the equation for this analysis is shown on the cloud above the model posted. Next slide. So this slide shows a scatter graph that illustrates the weak positive correlation between province and EI claims. The strength of the relationship is 28%, which means there is a 28% relationship. And as you can see that we have included a line of best fit as well to show the relationship between the variables. And we can see that the line is unable to reach all the points in the graph, hence shows why the relationship is weak and the model is only 7.9% effective. Next slide. So what conclusions were we able to make? So we rejected HO because the p-value was less than alpha, which was 0.05, which means that the model is significant. So our analysis tells us that the three provinces are not strong predictors of the overall country EI claims, which means the means were not equal and the model was not very effective. The next slide has our results section, and this marks the end of our presentation. We would be happy to take any questions. Thank you.
Any questions?
Do you believe that some provinces over others could have more of an influence on your outcome?
I can jump in here with an answer. A possible explanation as to why we came to the conclusions we did is that even though the provinces we looked at were the three biggest provinces in terms of population, there was still a very large difference in the populations themselves in terms of multiple millions. So in reality, a province like Ontario with a lot of people probably explains the total a lot more than a smaller province like BC.
That makes sense. Thank you.
Hi, could I ask a question? I was wondering how accurate you believe the listed claims to be, because there could be some people who don't even report their claims. So did that influence your data at all?
So I can answer that the only way to receive EI is to apply and be approved through the government. So we are aware that the EI claim numbers are accurate. It's just whether or not our understanding and our analysis was the best choice.
All right, thank you.
Any other questions? Okay, that concludes our last group presentation. Thank you so much. Thank you for your presentation, everyone. Give ourselves a thumb up. That's a great job. What you need to submit, remember, you need to submit your PowerPoint slide to Sakai under assignments. Each and every student will submit, not as a group, as individual. Each and every student will submit your PowerPoint slide, and each and every student will submit individual summary of other groups. The due date is midnight of today. And in terms of a project due date, it is tomorrow, midnight of tomorrow. If you need a few days extension, let me know, okay? So that is the project due date tomorrow, presentation slide and summary due midnight of today. And you are also asked to submit your data file, either Excel file, CSV file, or SPSS file, original data file. Again, each and every student will submit your data file. Okay, any questions? Last request, do I have objection if I publish this presentation to the YouTube? Any rejections? Okay, no. Okay, maybe I will post it on YouTube, and maybe you can quote this YouTube when you apply for job. You've done amazing job. Okay, thank you again. Next week is our last lecture. We will do the review for our final exam. the format of next week lecture is like this. We are going to do it on Teams, not computer lab. Okay, last lecture will be on Team. Okay. Okay, any last minute questions? Okay, thank you again. Enjoy the beautiful day. Today is wonderful. Get some sunshine. Okay, I'll see you next class. Bye.
Take care.
Bye.